Hi, this is Timothy Schutte with Exit Realty and Associates. Welcome back to my video blog. I have gotten some calls and questions about what the Fed rate cut means that just happened and what does it mean for home values and prices. So there's multiple things going into that. The biggest thing that the Fed cut does is it's based on inflation and changes to the economy and trying to keep the economy strong. I saw an article recently that said that most states, like 2/3 of them, I think, are technically in a recession, where some of the bigger ones are really pulling the weight for the country. So your employment numbers are starting to reflect that. States like Texas, Pennsylvania, and some of those are really doing pretty well to keep our numbers looking good as a country. But individually as states, a lot of them have kind of reached, I shouldn't say a lot, but a third have reached recessionary territory, a third are basically treading water. And we're going to see some more movement by the Fed. But what does that mean for home prices? What does that mean for interest rates? One of the big things I would say is we're seeing more inventory. We're back up to 4,400 listings in the MLS as of this recording. That gives us options for buyers. It gives us some pieces to where buyers didn't have that before. We are seeing some price reductions as well. Well, that means the market's probably a little softer than it was, but we still don't have that terrible much inventory compared to pre-pandemic times. What will that look like in the future? That's to be determined. The Fed's numbers, they do suspect, or we do expect, 1 to 2 more interest rate cuts going forward yet this year, and potentially some more, quite a few more next year, depending on where the market is. The Fed itself, with the minutes that we've seen, shows that there's kind of a dichotomy of the board governors voting yes and no for rate cuts, which then leads us to how are rates determined, mortgage rates in particular. So mortgage rates are determined based on the demand for treasuries and what the treasury yield does. So if that yield goes up, mortgage rates typically follow suit. And if it goes down, mortgage rates typically follow suit. Mortgage rates aren't really determined by the Fed's benchmark rate that we get so much advertisements about. That really hits more, I feel like, our commercial market and what banks charge each other. When the 10-year treasury yield goes up, mortgage rates typically tend to go up. When it goes down, mortgage rates tend to follow suit with that. What we're really looking for from the bond market is what's inflation? Is there a lot of demand for housing, new mortgages, as well as refinances affect that as well? And, we're starting to see a few more people inquire about refinancing because rates have come down about 1%, I would say, since the beginning of the year. And we're going to continue to see maybe a little bit softer buyer demand. But one of the things I would encourage is not to base your purchasing decision solely on interest rates, because if pricing comes down, 2-3%, that's a pretty big win, and you can refinance later on and save that monthly payment. We've been talking a lot about rates and mortgage rates. Well, what does that do for home prices? Well, so far, I think the last month or two, we've seen a pretty slow market for sales. And will that continue? It depends on demand, and demand goes up when affordability when housing becomes more affordable. And if rates go down, then we're going to see more affordability. We'll see buyers entering the buyer pool, and that's going to again continue to drive demand for something that we have a fairly limited supply on currently. When I say supply, it's housing active listings in the MLS. If that supply goes down, then you're going to see appreciation rather than potential depreciation. And currently, as a seller, we are starting to see some more sellers that are, I'd say, a little more motivated to get their home sold, but we need the demand to catch that currently. And I'd say the demand's fairly light. To me, I've always said the fall is the best time to buy, and I can see that currently today. We're in October, November, December. If you're looking to buy, would be a smart move, in my opinion, based on lower rates than earlier this year, home prices a little bit softer, and sellers being a little more motivated. If you have any questions on this, please feel free to reach out. This is Timothy Schutte with Exit Realty and Associates.